Opendoor Technologies has once again become one of the most talked about names in the market today, with shares staging another dramatic rally. Midway through Friday's session, the stock is up close to 20%, trading around $4.30 after touching an intraday high of $4.55. The performance is notable not only for its size but also because it comes against a backdrop of broader market uncertainty. The big macro story today is Jerome Powell's comments at the Jackson Hole Symposium. The Federal Reserve Chair signaled that interest rate cuts are likely coming in September, effectively opening the door to easier monetary policy after a prolonged period of restrictive rates. Markets had already been pricing in this possibility, but Powell's language provided confirmation and an anchor for sentiment. For companies tied to the housing market like Opendoor, the implications are significant. Lower borrowing costs would stimulate demand, encourage more transactions, and create a more favorable environment for a business model that thrives on real estate activity. Opendoor stock has already shown sensitivity to interest rate expectations throughout the year. Every time speculation about cuts surfaces, the shares catch a bid. What's different this time is that the rally is taking place against the backdrop of a major narrative shift inside the company itself. Earlier this week, acting CEO Shrisha Radhakrishna published a candid note to investors and customers on X, in which he declared that artificial intelligence would become a core pillar of the company's future. In that message, he admitted that only a year ago he was skeptical about whether AI was ready to take on meaningful tasks with real money on the line. That perspective has changed. He now says he is convinced AI can do more than people think, pointing to the rapid development of tools such as Repair Copilot, which can help streamline the process of assessing and managing repairs, and RiskAI, which is designed to manage transaction risk. He also highlighted the new Key Agent app, a tool that strengthens agent relationships and operations efficiency. These developments, he said, were built in a matter of days or weeks by a small but highly capable team, demonstrating that Opendoor can move quickly and deliver practical applications. The CEO's post went further than technology. He emphasized that the company has been running lean, cutting computing costs while building stronger AI muscles. He reassured investors that the board is fully aligned with management following a marathon meeting and that the strategy is to double down on scaling products like Key Connections and Cash Plus. In other words, this was more than a pep talk, it was a message that despite leadership changes, the company has a vision, a strategy, and the backing of its board. That message appears to have resonated. Retail investors, who have been central to Opendoor's story in recent weeks, amplified the CEO's post across social media. Anthony Pompliano, one of the most vocal voices in the space, has launched a campaign to gather ideas directly from shareholders to submit to the board. His framing of retail investors as a kind of decentralized hedge fund has become an organizing theme. It suggests that retail investors are not only trading the stock but actively seeking to influence the company's strategic direction. At the same time, Eric Jackson has continued his flamboyant efforts to keep Opendoor in the public eye. For a third day in a row, he has stationed himself outside the Toronto mansion of rapper Drake, this time holding a sign suggesting that the artist should invest $100 million in Opendoor and become the first rapper trillionaire. The stunt has drawn both ridicule and admiration, but more importantly, it has kept Opendoor trending online, feeding the very retail attention that has been so critical to the stock's volatility. Behind the theatrics, Jackson has also been working on a more substantive front. Reports indicate that he has been in discussions with Korean institutional investors about a potential stake in Opendoor. If those conversations were to bear fruit, it would mark a shift in the balance of the story, from one dominated by retail hype to one that includes institutional validation. For now, those talks are only discussions, but even the idea of institutional interest adds a layer of legitimacy to the broader narrative. It's also worth remembering that Opendoor just recently reported its first quarter of adjusted EBITDA profitability since 2022, with $23 million in earnings on $1.6 billion of revenue. While volumes remain subdued due to the overall housing slowdown, the return to profitability demonstrates that the company's pivot to a more asset-light model is beginning to take hold. By focusing on partnerships and technology rather than carrying heavy housing inventory, Opendoor is trying to redefine itself as a scalable platform rather than simply a capital-intensive home flipper. Taken together, these threads explain why the stock is surging. On one level, this is about macro tailwinds. Powell's confirmation that rate cuts on the horizon is a green light for real estate-linked equities. On another level, it's about company-specific factors, a credible AI pivot, leadership alignment, and proof of operational discipline. And layered on top of that is a retail movement that continues to treat Opendoor as both an investment and a cause. Of course, risks remain. The stock has been extremely volatile, capable of losing double digits one day and regaining them the next. Short interest remains elevated, which adds fuel to these swings but also creates the possibility of further short squeezes. Analysts have been cautious, with some warning that RE's role in housing may be overstated or at least not yet proven at scale. And the housing market, even with rate cuts, faces structural challenges like affordability, supply constraints, and demographic shifts. Yet, for now, the momentum is undeniable. Opendoor has reclaimed the $4 level decisively, with today's trading showing intraday highs well above that mark. Retail engagement is at a fever pitch, institutional conversations are being floated, and the company itself is leaning into an AI-first identity that appeals to the growth-focused investor base. As the session moves toward its close, the key questions will be whether the stock can hold above $4 into the weekend, whether Powell's dovish message continues to lift housing stocks in the coming days, and whether Opendoor can keep feeding the narrative machine that has turned it into one of the market's most watched tickers. For investors, this moment is about more than just a percentage gain. It's about a company in transition, a stock at the center of retail activism, and a macro backdrop that could finally be turning in its favor. If September does bring rate cuts, and if Opendoor continues to build out its AI capabilities while staying lean, then today's rally may be remembered not just as another bout of volatility, but as the early stages of a more sustained re-rating. That's the story so far midway through Friday's trade. Opendoor is not only moving with the market, it is shaping a narrative that extends from the trading floor to social media feeds, from boardrooms to the sidewalks outside celebrity mansions. Whether it can convert all that noise into lasting shareholder value remains the ultimate test. But for now, it is once again the stock everyone is watching.